The average car payment today is $1,000. Just 6 years ago, it was $467. On top of that, car repossessions are at highs, and majority of car owners have negative equity. Car repossessions are peaking at 2008 level highs right now. The economy isn't really doing that well, even though the stock market is roaring. How is everyone actually feeling? The markets right now, if you look at the SPY based off the weekly chart, it is in a holding pattern right now. For the past few weeks, we've been having pretty insane volatility. Kevin Warsh was just sworn in, and he delivered a hawkish message, basically saying rates are not going down any year. And of course, the market reacted. The Dow DIA just had the worst weekday ever on record after that announcement. And literally, if you look at this on the weekly, it's literally all sellers. Some of these stats should everyone put alarm bells ringing. This is an opportunity, as always, as I say, when the market has volatility and pullbacks, it is an opportunity. To give you an idea, in general, the forward guidance is not what the market wants. We want rates to go down. Cheap money. The market loves cheap money. You don't have to be a rocket scientist or a macro genius to realize the market sucks. Things are very expensive. You don't have to go through and be like, oh, this is way more. I was just at Costco and I realized bagels are double and they're also giving you way less. Right now, as you can see, the Dow is literally all sellers pushing down. And remember, it's a short week. Friday, Juneteenth, the market is closed. This is all sellers, a clear rejection candle. The SPY is rocky right now. We got insane volatility. IWM looks like it's trying to do something, but overall, the three pillars of the economy, small caps, industrials, and the SPY, which is the overall market, this looks kind of iffy. Now, I want to showcase what is happening right now. The three pillars of the stock markets, IWM, SPY, as well as DIA, they're kind of in rocky territory. Semiconductors, it seems, is where money flow is going. Looking at SOXL, I mean, this is an insane run. We went from just not too long ago, end of March, going from $53 all the way to $279. Money flow was definitely going through that way. Now, where's the next level of opportunity? Within SOXL, there's AVGO, Nvidia, and Intel, and AMD, and there's obviously several other semiconductor stocks. But Intel had a pretty decent pullback all the way from 164 all the way up to 133. Now, AVGO is the company that I see based off the weekly, off of swing trading, to see the most opportunity. We have a strong hammer candle with above average volume, and particularly remember, this is a short week, so only 4 days and the volume is already matched with a full week. In our community, literally, we said we're going to play this up to 450. This is kind of expensive stock, so you could do a debit spread. AVGO on the list, it's basically a tech giant. And of course, it's trying to build their own custom chips to avoid paying to Nvidia and Nvidia. And obviously, AVGO is the prime beneficiary for this. Now, if you look as well at Nvidia, it has been, within this 211, when it finally broke out, it always had a natural tendency. Just in general, if you look at the history of Nvidia, every single time it breaks out, it kind of retests below. So I don't think it's not in the realms of impossible for it to go down to like 190s. I think, again, because the semiconductor wagon is really pushing, I think this is going to move as well to like 230 levels. This isn't as strong, and that's the reason why I advise the community to go over to AVGO versus Nvidia. Also, if you look at AMD, another one, all-time highs basically. Now, my favorite stock from a risk to reward, there's two options. You could literally just purchase shares of Meta and kind of ride the wave. Or I would do longer term dated options if we were to swing it. But for my preference, I prefer to do shares because then I can kind of ride the wave and look at it as an investment. So Meta in general right now is trading at 577.22, and the risk is onwards down to 479.84, and then upside is to 791. They are a cash making machine. In general, we have a 27% discount as it is to all-time highs. Meta is making so much money. Quarter one revenue is astounding, 33% year over year to 56.31 billion. Impressions are shooting up 19%, and the price per ad climb is up 12%. There is a valuation disconnect, which is one of the biggest things that I look for in investing, especially asymmetrical bets. Meta is trading at 18 times forward valuation price to earning. To put that in perspective, it's like you're getting basically a great tech monopoly at a staggering discount. Top line 33% and 41% operating margin. At the same time, it's basically trading at like a consumer staple stock, which not many people have anyway. So there's also additional revenue streams. So this is personally for me, I am looking this as an investment, and upside right now. We are looking at the lows. Last time it was here was April 2025 levels. Can it go to 484? Yes, but I'm going to be a heavy buyer if we get to those levels. So I'm starting to dollar cost average into this. Now I see this as a long-term investment, and sometimes I will swing shares alongside with it, but I have the option to do both. So this is my favorite stock for the long term, as well as swing whatever you guys decide to do it. I've always said 2026 is going to be a stock picker's market. I would not be personally purchasing many stocks because I've already did my purchasing a few months ago. If you want to work with me and trade with us in the community, link below. I'll see you in the next one.